Hey guys, welcome back to another video. Today we'll be taking a look at SBUX. So as always, starting off with the PE ratio, it's currently at a 28.28, which is decent to see. You ideally want this to be a 20 or less, but having it a little over isn't too much of a problem. The PE ratio is important because it gives you an idea of how overvalued a company potentially is. Now, seeing if they offer any dividends, they do. Their yield is at a 1.96%, which equates to about 49 cents per share, which is pretty average, but it's always nice to see a company give back to its investors, even if it's a little bit. Now, before we get into the income statement, I want to see what their gross margin and return on invested capital is. So right now, the gross margin's basically 23%, which is good because the lowest you want this number to be is 20%. Then with the return on invested capital, on the other hand, it's looking good at 27% because you want this to be at 7% and above. Getting into the income statement, I want to start off by looking at the revenue. So as of the most recent year, they're bringing in 29 billion, which is up roughly 7 billion from 5 years ago, so this is great to see. If you ignore 2020, it's basically been steady, consistent growth. Now with the net income, it definitely needs some work as it's been really inconsistent. I can't complain too much since they are up from 2017. And the last thing I want to look at on the income statement is the shares outstanding. So this is something you want to see decrease. The more it goes up, the less your shares are worth. But as you can see, it's looking great. Overall, they've managed to bring it down to 1.18 billion from 1.45 billion. Moving into the balance sheet now, I want to start off by looking at the current assets. So the current asset growth looks good as they brought it up to 9.76 billion, which is an increase of 85% from 5 years ago. Now with the current liabilities, on the other hand, they're at 8.15 billion, which is great to see as they have almost 2 billion more current assets than current liabilities. Last, and one of the most important aspects to look at in any company is the free cash flow. Cash flow is important because companies that have a lot of money on hand have the advantage of being able to pay off any debt, invest into future growth, or pay dividends. So this is clearly something you need to see be improved on year after year. As you can see, it's lacking the stability I want in a company. It is up over the past 5 years, but that isn't without the 2 bad years it experienced in back-to-back years. In conclusion, Starbucks definitely has some decent financials. Some criticism I do want to give is I want to see more consistency with their net income and free cash flow. When it comes to buying the stock, I personally wouldn't do it unless it falls into the $90 range. Two things I want to mention before I end the video is my trading strategy is centered around finding value in a company. If I don't see consistent growth in most or all the categories I cover, then I tend to stay away. Secondly, I also want to point out that I'm not a financial advisor. I'm just a guy speaking my opinion on stuff on YouTube, so I highly recommend doing more research before coming to the conclusion of buying or selling any stock that I talk about. If you guys have any companies you want me to take a look at, feel free to comment them down below. Otherwise, thank you guys for watching. Feel free to subscribe and have a nice day.